The following presentation is brought to you as a courtesy from Forex Academy. This is part of our service, Become a Pro course. If you find it interesting and wish to be updated on new releases, please subscribe to our YouTube channel or join our community at forex.academy and receive all our services for free. Your like is also highly appreciated. Enjoy.
Another very popular and well formatted trading strategy is, of course, your ability to identify trends in the markets. Of course, there's volatility in the markets. We can see the oil market in front of us here. There's a lot of volatility over the daily price section. However, there is a trend here. There's a price channel that would suggest to us there's something very, very constructive in terms of the trend moving across this market. What does it involve per se? Well, trading this strategy gives you the opportunity to gain profits by following the movement of the trend and entering the market in the direction of the trend. Okay, so whether it's technical or fundamental analysis, let's say we believe the demand for oil is going to be consistently strong over the next 6 months. It is going to bring the oil market up to $80 a barrel. How can we look to identify that as a trade over the next, say, 3-6 months? Well, we look at the trend structure. We ask ourselves, should we aim to forego some of that volatility in the markets? Again, it takes patience to develop such an idea. There are going to be times where you open your trading platform and it will show you $200 or 200 euros profit on the trade, and the next day 140 euros in the trade, and you will be frustrated. But your idea is to follow the overall trend structure so that at the end of the month or whatever time period you're trading the overall trend structure for a higher profit goal. Okay, so it is considered, and worth noting, considered to be one of the most common trading strategies. Okay, a reduced trade frequency, again, because it's more dated on the term of the trade, of course. There is discussion to say that, you know, if you're looking at a trend, well, of course you can zoom in the price action to 15-minute charts, and if there's a trend over the 15-minute price action chart, you can trade that. That is certainly the case, although you will be prone to more extreme volatility in the shorter term, so you're not foregoing the volatility as a term trend trade. We do look at larger time frames as suggested, 1 hour, 4 hour, or daily candlestick price action. The larger the time frames, the less competitive. Again, you're not fighting over every single pip in there in a trend. You're looking for an overall trend basis trade, and again, you're less prone to that extreme volatility trading the trend. So let's move forward into the MT4 trading platform yet again to look more into this style of trading. Okay, and we'll use the oil market that we have there because it's a very good example. Evidently, if we zoom out on the price action, you can see, guys, the trend, very well based trend in this market. Okay, so is this the best buying opportunity now? What do we think, guys? This is the oil market. Again, that is simply the question. Okay, for us oil bulls out here, is this, again, I'm not asking about this specific candlestick 1, 2, 3, 4. I'm talking about this area around $65. Does this confirm a very good buy signal to the market? Because the market has traded down in around that level. You could argue it's just broke the level, but the price that the market is consolidating at is in around our long-term trend level. Is this just going to follow another leg up to the upside, just like it has previous times right here? So again, you're simply looking to follow the trend. Now, it's worth noting that trends are much more structured in terms of what market you're looking to trade. Okay, now I'll choose a few markets to describe this trend structure again. So that's the oil market. Let's move on something with a little more volume again. Perhaps a good trend there was, of course, we still have our line in it, the cable market, the pound sterling against the US dollar. Now we've now broke that overall trend structure, but you can see how consistent it was for a long period of time. Okay, for over 1 year there, we had a bullish trend in the cable market. Again, looking for opportunities to trade in the long term. Well, you had several, and we'll just highlight them on the chart here. Effectively, you could have made the same trade here it would have been a loser, of course, but after 3 very good trades, I mean, you could have bought this market right here and caught profit anywhere in here for a short carry trade again, for perhaps you'd be in that trade for 2 weeks, let's say, maybe 10 days, 2 weeks, again, increasing. Let me just see the profit on that trade. 128 roughly to around 133. Fantastic trade. Okay, so you're effectively looking for 500 pips in one market there over a short space of time just by consulting the trend. Okay, now there are many different opportunities in terms of looking for trend opportunities. Perhaps one of the best examples we can give you are the equity markets. Why? Because, well, they're relative to the overall level of growth and strength in the overall economy, and of course in the equity sector. So let's zoom out in this market here. Okay, now what do we see at this moment in time? Well, we see a lot of volatility in more recent price action. I can just actually highlight that here. All this is describing a large amount of volatility, and that's to be expected as we've seen a large shock to the market enter there in February. Again, a large shock there in March to May. So we're seeing a lot more volatility, but I want to focus on the overall trend structure because we're discussing trend trading. You can simply look to insert a trend line on your trading platform as such. That's effectively what you're seeing there. You're seeing this market trend to the upside. Okay, very strong trend if you zoom out on the price action. So there are many different trading opportunities to say. And again, trading and investing go hand in hand, guys. The investment community often refer to these as the best equity market potentials, and you may have heard the strategy buy the dip. Okay, buy the dip trading strategy. And what that refers to is the overall, I suppose, economic state of the economy is, overall state of the economy is very strong, and you're looking for buying opportunities right here at nominal levels. Okay, so you're looking at the trend and you're looking to try and get best possible trading opportunities over the long term. And again, if that's your task at hand, you're not necessarily looking to buy one of these opportunities so that you can hold for 2 or 3 days for profit. Okay, trading the trend is much more structured in terms of the term of the trade, unless, guys, you're trading something a little more consistent with shorter time frames. So let's just discuss these shorter time frames again. Okay, let's zoom in on 5-minute price action chart here. Okay, so there's just something going on here. Again, this is perhaps a little too volatile. Effectively, we don't see a trend there. Okay, we don't see a trend in this Dow Jones, just given the volatility has been quite extensive over the past while. Here's a very, very strong candle on the weekly price action in the copper market. Again, if we break it down to the daily price action, we see a trend forming. If we break this down, I'm going to bet into the 4-hour price action. Yes, we see something very constructive forming, and the 1-hour price action again is going to be great to describe a trend. Okay, so let's do some little analysis on this market here. We've broken nominal levels again with these highs. We've also broken this relative high here. That could be our trend, our opportunity to get long the trend. And again, if we simply look to insert our trend line roughly around there, well, we can say where is the best trading or buying opportunity. Effectively, we've missed this one here, but we've just broken the first support level here, right at level. When we get a break of this high, perhaps, then this could be our candlestick to look to buy this market. Okay, effectively, that's what we're getting. We're getting a big shoot in profit of this market over such long term. Again, we could take profit in one candlestick there, perhaps. That would be a great trade. Or if you want to hold out for the remainder of potentially trading this trend for a day, you can, of course, 2 or 3 days hold this into any profit potential you so wish. Also, you'll be able to mitigate your risk on the trade in several areas without getting stopped out. So that's one real advantage to trading the trend, that you're looking to follow the momentum, and you're always willing to let the market pay you as long as it continues to grow in that direction and continues to outperform your expectations. Again, just simply move your stop loss up with the market again and let the trend continue until it falters and looks to reverse. One real bonus, I suppose, to trend trading is that will likely happen. Sometimes you'll enter the market on a trend and the market continues to move, something that you had a profit potential of 100 euros. and evidently the market moves quite strongly in 2 or 3 days. You realize you've caught a trend, it's moving quite strongly, and you are simply mitigating your risk to 50, 60, 100 euros, and the profit will keep on moving as the market continues to gain. So there are quite very good, strong trends across many different markets. So I'll just choose one more because we did trade. I'm not sure if I had it on screen here. At Forex Academy, we traded the US dollar against the Swiss franc there. And there was a very well structured trend here, albeit there maybe 2 months ago. So we traded this little break here. This is the best example of a trend, okay? One of the best examples, because effectively the market never looks to pull back. Now, why is this the case? So we enter around these prices here as we break nominal highs, okay? Effectively, we have 1, 2, 3, 4, 5, 6 strong bullish candlesticks consecutively in a row. And again, you can simply mitigate risk as you go up on the trade. Now, this candlestick does look to pull back, but again, your stop loss could be perhaps from the last corrective low and continues to trade up, guys. So it's not really causing you any angst or causing you any pressure. You simply look to follow the trade as much as it can reverse, and probably you'd likely just get stopped out with this candlestick here or this candlestick here. So that's a fantastic profit potential just by looking at the trend structure. Again, trade what you see with the trend and not how you feel. Sometimes you'll be in the trend and ask yourself, well, the trend cannot continue. It simply cannot continue in that direction. Again, if we look and consult some of the dollar moves in recent price action, again, a very strong bullish dollar trend. Again, just look how the break of the trend continues to trade from nominal highs here. We had our double top here with this price action. So if you believe that this is not going to break, and I'll just remove some of this analysis. If you believe this support level at 142 in sterling dollar was going to hold up, you could have sold this market here and simply place your stop loss to new highs. And look at the consistency of this trend over a 2-month period. Very, very weak and continuing to trend to the downside. So it can be very advantageous in terms of following momentum in many of these trend opportunities. Let's move on to position trading. Again, it involves a different setup of, actually approaching the markets. A longer term trading strategy where a trade can last for weeks, months, or years, and it looks to maximize profit through major shifts. Okay, so if we have major concern moments, perhaps like a Brexit referendum, perhaps like an equity market bull run, perhaps again like a changing structure of an interest rate decision or monetary policy shifts, perhaps some political uncertainty as well, you can always look for these carry trades. Perhaps, again, if you're simply a Forex trader and you believe the Japanese yen is simply overpriced and is looking to depreciate over the medium term, you can hold that, and we refer to that as a carry trade in institutional trading, where large hedge funds or pension funds will obviously invest in cash markets, i.e. your Forex markets, to hold carry positions for 2 to 3 months. It does focus more on capital appreciation, so you're holding a position for a long time. And again, we have an example of the Brexit situation. Because of the shock that sterling is going to see a depreciative effect, and as it depreciates, you're not looking to capture a few pips in the day's price action. You're looking to capture perhaps, a 14% depreciation in sterling over 3 months, for example. So that is a large move in a currency, but it does happen in many different assets. We have a strong focus on fundamental and technical analysis. Again, minimal trade frequency. So because you're trading perhaps with bigger size, you're not effectively looking to scalp and get involved frequently in the markets. You will have minimal trade frequency. You're under no time constraints. So it could be in a trade for a day, a week, a month, as long as the trade reasons or the merits of that trade still exist, then you can hold that trade open. Short-term pullbacks and volatility is of course going to happen, but it's less of a concern to your overall trade objective. And that's very important to actually understand the complexity of position trading, long-term trading, taking a position in the market and remaining resolute to your objectives for that trade. Again, let's go through the JFX trading platform. I'll look into the style in a little more detail. Okay, so what we have here now, again, we've just arrived on the cable market. That could be one position trade for you. Why? Because if you zoom out on the price action, which I'll do here, this is the daily price action. You can see we've had a long-term technical break of the trend. We are now bearish this market, okay? Technically, we're now very bearish this market right here. Again, as the market pops up here, if we're not in this trade, you can look to simply take a long-term sell trade in this market, okay? So this is our bearish activity here. Okay, and we now want to sell this market. Now we do forego best price execution because we're looking to allow, we are now looking to allow to give it, I suppose, if we're looking for a 10,000 pip winner or a 5,000 pip winner in a forex market, let's say from 500 pip winner, let's say from 34s down to 29s, of course, then we're looking for a long-term trade. That means we should give us a stop loss of at least 100, 200 pips as a potential for foregoing that volatility, because you don't want to get stopped out of a very good trade, particularly if you have accompanied large trade size in it. You want to give it that space to breathe and not get stopped out of intraday volatility, just like you would see here in many of these candlesticks on the way down. Okay, so that's just one example. We'll move across just to analyze one more example here in terms of a long-term position trade. Again, perhaps we'll choose the Nasdaq 100 again. We could choose that. We'll be a little bit of a contrarian to this trade now. Why? Because, well, we've reached long-term highs in the Nasdaq. These are all-term highs in this equity market, okay? And we're starting to see a real shift, a real head and shoulders again, just with the last 2 days price action, okay? So without too much technical analysis, this could be a long-term position trade. Let's just say we believe this bull market is over in the medium term. So our position is to actually be bearish this market. And now we've just waited for the market to sell off from all-time highs to give us that confirmation. Effectively, what we could do is take a short-term position here and then look for the price to come down to a new, let's say, a new correction in around 400, 500 pips, okay? Now we're simply foregoing a 120 pip loser or something, and the risk reward is good on the trade. But again, you know that that's not going to happen tomorrow or over the next few days. If the trade is likely to occur, you can see here, that could be a position trade from high to low or in around nominal levels. And it will take 2 weeks, perhaps 3 weeks to develop. Okay, so it is more of a position trade. It's more of a fundamental view on your idea where the market is. Perhaps it's a technical trade on the analysis, of course, as well. But you are likely to hold that position trade, i.e. carry that trade over a set period of time. And again, trading with indicators, guys, many technical indicators use these indicators, technical traders use these indicators to assist with trade selection. And we often get the most prominent question here at Forex Academy: how do I select trades? How do I know when to enter trades? Again, you can use technical trading and your fundamental analysis to look to position. Okay, every trading indicator will have its pros and cons, okay, advantages and disadvantages. So it is important to understand how each indicator works and use it to assist you in your decision-making processes. And we have a few on screen here: Elliott wave theory, MACD, RSI, Fibonacci retracement, of course, harmonic pattern indicator, average true range, moving averages, parabolics, of course, Bollinger Bands. Look, and there's many, many more indicators, and of course your price action as well. What I'll do just quickly before we finish, of course, our bonus webinar number 1 is just to go through some indication with you. I'll bring up a recent trade that we had there just 2 days ago. Very, very good technical trade in the Aussie US dollar. We still have some analysis on screen here. So what I'll do is just explain this with you, okay? I'll actually delete it and I'll just go through with you here, okay? So the first thing that we have, that's more of a, I'll just delete that as well. First thing we have, guys, is a bounce from nominal levels, okay? So in around our 75s, you can see that we have a long-term resistance level here in around the last corrective low. Okay, but we know what is happening in this market. We know that we've breached these highs as well, and that the US dollar is very strong. So we zoom in on relative price action here. This is the medium-term trade the whole way, I suppose, a long-term trade as well, from January highs there around our 80, 90 7 level. Okay, so how do we look to trade the market? Let's just do some early technical analysis. Again, we use and consult the price action. We see a series of lower highs. Right now it's question time for this market. Okay, how do we use what we call technical confluence to describe this trade and look for opportunities? Again, this is a trade we evidently took 2 days ago, and it leads me to explain it now. Effectively, what you look to do is stack the odds in your favor, really. So again, we have our channel indicator that we just drew there. Now, we were not privy to these last 2 days price action 2 days ago. We have a little confluence there, and again, something like that would suggest that we have a grace period within our 76 to 77 level of 100 pips roughly for this market to show some volatility. But again, we simply react to the price action in around levels. Now, what we can do again is add a Fibonacci retracement. We can either click that button there or go to Fibonacci retracement. And the trend structure is to the downside. The overall trend structure is to the downside. So we choose the last corrective high and then bring it down to the last swing low. Okay, now we have something building up a little in detail. Again, if you're looking for retracement trades, you're actually looking to trade the trend in that direction. So to this direction here. Okay, now we broke through the 23.6% retracement level. We now we're approaching the 38.2% retracement level. And again, we got a signal to tell us that we rejected off the channel as well. So we're starting to answer this question to where the technical confluence is coming from. Let's add just a little more concern. What we had there, of course, was a moving average indicator. I believe it was a simple moving average over the 100-day moving average, simple period. Okay, I'll just put this in green again to show you. So again, it is flatlining, but again, in more relative terms, if I just remove some of this annotation so you can see, guys, in more relative terms, it is, of course, trading to the downside just like this. Okay, so the overall trend structure is starting to lean towards the downside. Now, if it comes up, if the market trades up like this, what I'll do is just use a green bullish candlestick to describe this. If the market were to trade up here and effectively break through and close above our 100-day moving average, then, well, that would negate the trade. But effectively, since these moments here, the market trades below the 100-day moving average. It did try and break above that here. You can see these between these candlesticks here, rejected each one of them at the 100-day moving average. And now we are at a technical level where we can say, maybe try and sell the market in around here, and our stop loss will be above the moving average indicator. Just a trade idea, but again, you're starting to use some technical confluence. Again, what we described is a move to the upside in the Australian dollar when, of course, this dollar is weak. So we wanted to suggest if this market is, of course, overbought or oversold. And we simply look to choose, we'll just change the color here so we can see it in a little detail, a relative strength index. Okay, now what this simply suggests is that we're seeing a little bounce in our relative strength index up in around, and we were around here 2 days ago. So if we were to see this market just trade up and reach in around our 70 level, that tells us that this market is actually overbought. That's our signal, it's overbought and welcomes sellers to come back into the market. So we had a few, it was approaching, trading up even when the market wasn't too strong to nominally high levels in around our 60-65 level here with our RSI indicator. Okay, that's what we're looking at. Again, we didn't get everything stacking up, but we got suggestions and some information to tell us this market was looking to roll over. Effectively, it did, so we sold at these prices. Again, using the technical confluence, we're now short the trade and hoping, well, not hoping, aiming for the target to move on to nominal lows. It doesn't have to retrace the whole indicator, of course, but as long as we get a good risk reward in the trade, we've used some technical analysis to look for a trading opportunity. And again, we can change our momentum to whatever term we'd like to trade. Okay. So congratulations, guys. We have now finished this bonus webinar number 2 of your Become a Pro course. That inevitably finishes off the entire Become a Pro course, guys. Well done. It's been an absolute pleasure going through this whole entire journey with you guys. Thank you very much for joining us here at Forex Academy. We'll see you next time. Bye for now.